Good afternoon, everybody. What we're featuring today, and we have been featuring it, we've been buying it, is the small cap bear. It's TZA small cap bear that was up here at $45 and got on sale at $24. We have a correction that's coming through and a lot of volatility. The growth cycle, the FOMC cycle, the rising interest rate cycle, and lots of things that could choke the small cap has been an extremely great bull market all year. And the bear funds, like I said, on a weekly level here, went from $44 down here, and you can see that 3 week. So what we're going to do based on the analysis that the growth cycle that everyone has been led to believe and what the earnings are actually worth, they're not. And they're wrong again. And the summer rally has been over since we called it 3 weeks ago. So the dog days of August, and we look at buying this side of the market because, you see, the thing about it is the growth rate for small cap will not be able to sustain that higher retail valuation that the markets had put on them. They are going to come down in value. So once again, the bulls can get ahead of themselves in one respect. They give it all these multiples and everything, yeah, but you got to have growth. You have to have growth. So when we put this in the portfolio, we put it down here where they're on sale. And we're going to continue to look at, it doesn't move a lot. It's not really based on an intraday because it doesn't move a lot. 26.4 is where it popped up to 27.20. But this is where the rally started. So when small cap was selling off, guess what was happening? The bull fund, small cap bull, called TNA, and this is on a 60-minute level. It's gone from $59.50 down here to $52. It popped up and it's reversed. So the bull has come down, and considerably it's come down in value. Once again, when you have this small cap chart right up here, the bear fund, you can clearly see in the same live video where that bull in the small cap has done its thing. Meaning that it'd been in a great bull run all year. And small cap had led the way. As always, they should. However, the growth rate is not sustainable in small cap at the current retail valuation level. Meaning that with the lack of growth, we don't have the growth rate, the earnings multiplier is going to come down. Their retail earnings right now at the high valuations for small cap. So that's what we're saying, and that, look, the economy is very sluggish for small cap. The economic cycles are not favorable for small cap growth. Therefore, when you look at the equal weighted balances and seasonalities, you look at how to take advantage of the ETF structure so you can short the bull and go long the bear. So you're making money when the bull and the small cap is dropping, and you're on that bear side that was down here at this other breakout point on a 60-minute level. And you're getting paid twice. I can tell you that the economic cycle is not there at the current level going into September, October, and November, and the higher seasonality with higher volume in the next quarterly earnings cycle. When you look at the scorecard and the earnings, they're not what a bull would want. Bull wants a lot better than that. And I don't blame him. And then the bear case is that I'm describing their case is that we're experts on the fundamental side, and there's a huge disconnect for higher growth, sustainability, and small cap. I'm going to conclude it with the bull and the bear And when the small cap leads the markets down, the rest of the indexes go along with it. The NASDAQ composite goes with it. The S&P 500 goes with it. The summer rally was over here in small cap. The seasonality rallies for small cap. Small cap led the bull up, but now it's leading it into a reversal bear. And we're starting to see that there are some changes. And let it be known that all of the propaganda and media and everything that you do look at and hear are generally wrong. And they're speculators about things. This is the reality set of facts. And the economic indicators do not add up mathematically. And when small cap reverses, the rest of the indexes, such as transports, even the financials, but you always like to know that bulls are, small cap bull runs are great runs, and they are up huge. And the thing about it is that sustainability for the bull is at high risk as of right now on 9:21 a.m. Pacific Standard Time, 8/21/2013. And how do I square into bear and bull ETFs?